All right, guys, welcome to today's CPI call. I'm not planning to trade this today, to be honest. I had a pretty late one last night, working on other things, and I had a very good day, very good week, and I'm not in too much of a rush to jump into things, and I think that's important. You know, I'm recognizing that I'm not going to be able to perform today at my highest ability, so I'm going to take it quite easy. So I'm still going to do my debriefs, and I'll still run the I'll run the stream for everyone, a little debrief going into yesterday. But just quickly looking at what happened yesterday and where we are right at the bottom of yesterday's spike. We're just trading slightly above it. Yesterday's close was 15. We're now trading at 22s. So what we're potentially looking for on CPI, we've got this very, very balanced profile. We might see a flush on either side. You've got very, very flat bottoms and tops, showing there's been some resistance to break above the auction spike from the 26th, which is this little level here. You see, this is all in the notes. Going back to yesterday, so yeah, that's where we're kind of holding just below there. So you see where the references are and how they make sense, right? So where are we looking to target if we break low? The lows I think are 4,006. That might be an intermediate level there to be looking for, and then if we end up breaking down, the high time frame target is 39.72, somewhere around there. This little big volume profile here, we've done a lot of business here. We expect to do some more business at some point in the future. So when you're looking at this data is the CPI. It's not the Fed's preferred data, but they do look at it. They prefer to look at the PCEs. But this is going to make headlines. Very sticky inflation in the US. It's not coming down in a hurry. We saw the ECB yesterday really talk about how they're going to tackle this head on, and it's full steam ahead. And you saw a huge move in bonds. And I think, guys, what you really want to be looking for today, if you are trading the ES and other indices, especially the NASDAQ, which is very interest rate sensitive, is you really want to be watching what the yield curve's doing, what are rates doing. And, it's something that, correlations aren't always in play, but at the moment they really are, especially when we're data driven around something that the market's really focused on. It's not focused on absolutely anything else other than how central banks are going to cover inflation. So without further ado, because we've got really only seconds before the actual release, I'm going to actually just, I'm going to watch. I've taken a few stops the last few days, trading really fast, whippy markets. And although I see there's potential for this move down to 92.78s, I just don't want to. I want to leave Friday with I've had a really good week. I've done tremendously well with my process, with my work, and running the Balanced Trader is a part of that, because I'm doing it for myself, but I'm also doing it for you guys, and I want you guys to learn what it takes to prepare yourselves for these markets. So I don't want to spoil it by jumping in and making a mess of things. I'm just going to turn on the squawk here so we can hear what they say. I'm going to turn it on the audio as well and make sure it's all up and running. I just want to watch the market reaction. We'll get this on video as well, so it's good to remind it. That's actually why I'm recording this, because I tend to record my trading, right, so I can learn from it. So this is just a lesson in learning from my trading. I want to see what goes on, guys. I want to see what happens on the footprint. I want to see how the market reacts. 10 seconds. Okay, we're just above yesterday's close. This is going to be whippy. 8.3 is expected. Boom.
1%, that's high in the forecast.
That is massive. Watch yields go. Yields are absolutely flying. This is, yeah, if you think you can trade that, look at the gaps, guys. Look at the gaps. Absolutely incredible. Yeah, I mean, you can take that, but the chances of you getting whipped back or whatever, it just... Guys, where did we stop? Where did we stop? We just spoke about this seconds ago. 72s was the target, right? We got straight there, in a straight line. Back in the day when I was spread trading, I would leave bids and offers at these key areas, and I'd hope to get picked off, and I'd be willing to put on incredible size just to get filled at these areas, and I would scale in only on data, by the way, guys. I'd only do it on data, and I would be looking for the quick flush to really areas where I expect there to be some serious support and resistance, and then you could ride it back. To be honest, something I need to actually, that could be something I need to bring back into my game. It's something that I've done in the past. It's really something that you have to be very, very, very disciplined, because things can get very, very wrong when you're fading big moves, right? So it's not something I advise for everybody. This is my trading style. I'm hoping to pass on some tips to you guys. But yeah, I mean, that was incredible. That moved straight down to where we were just talking to. Let me just bring up the overnight. And I had no interest in trading this really, just because of the way that we were so balanced. There was going to be a big, that liquidity that built up. One side of it was going to be wrong on the open. On the release, and wow, I'm actually just amazed how high inflation is going now. I mean, it's actually scary. Let's try and listen to what the analysts are saying.
Second month for spot 6%.
Guys, the highest estimates were 8.4. Now, I'd love to explain to you guys how I actually trade these events, okay? And these are all tricks that I learned from some top traders, and I've picked things up along the way from, I've been doing this for 20 years. I used to use some algorithms to trade data, and basically the way I would treat these data events is pretty simple. And if you want to learn how to do it, you need to go on my blog and you need to check how I trade the NFP, okay? That is pretty much a perfect example of how I trade the NFP. Yeah, so anyway, I hope you understand why I didn't want to trade that, just because I wasn't really prepared for it. I wasn't wanting to get involved in something that looks like that. Okay, look at you're talking about 15 lots trading on each price. Liquidity, when it disappears, it's an issue, right? And you've got the highest liquidity risk on these kind of events, because it just pulls. It comes back in pretty quickly. Within a few minutes, it'll the market will, it'll jump, and then the repricing process will start. We'll start getting an auction, right? So being aware of this and not jumping in. I've given away so much money trading these events. Now, it's a bit similar to yesterday's ECB. And yesterday's ECB, I didn't trade the bunds because I just all the BTPs, because I just know that initial release off the 1245 headlines, it's going to be so whippy, so dangerous, and I've been whipped out for 20 ticks in the BTPs before. Only to see it go 2 points in my favor. It's you can't control risk very well. You need to have big pockets, and that's not what I'm really trying to teach here. I'm trying to show you guys you can trade with limited risk. So in these kind of environments, what's a good proxy to trade, guys? Answers on a postcard. ES is almost, that example there, this CPI was almost untradeable. So what do we trade instead of the ES? Now, I'm not telling you guys to do it, but this is what I do. This is from my experience. In my experience, you want to find a proxy. You want to find a nicely correlated product. And I'm not talking about the EMD or the NASDAQ, because that's just the same thing. Go find something in Europe. Go and find something with a little bit more liquidity, where people aren't quite looking at it with as much as much detail. Okay, so that is a crazy tale. Watch how this reacts. Now let's just bring up the profile and let's bring up our notes. But even if you took the initial if you took the trade at 72, you're not looking at a lot of a big pullback. That was very risky. This is not a whipsaw. Looks like a continuation. This is like an open drive. This is bang, and then now liquidity is just following this down. Sellers are trying to find liquidity. They're going to keep selling this until they find pockets of liquidity, and then you're going to see a stabilization, a holding point, and that's where you want to look for to target your trade. Now, I'm not going to do that in this case because we've already moved 40 points. That's 1% of the S&P. Not interested in taking these trades now. This is just too whippy, and it's just not my game. If you look at the trades I've taken the last couple of days, they've been in
15 basis points in cumulative Fed hikes in 2022. Fed funds of 2.985%.
if you watch my streams for the last couple of days, if you look at the trades I've been taking, the ones that have really worked, the ones I've got 30, 40 points on with a couple of ticks risk, they are all just in very almost grindy markets. I wait for the auction to slow down to give me some information. Look, I can find sellers here. I can find this. There's absorption here. I'm finding pockets of resistance. Those are the areas I want to get traded. I don't want to trade when it's super whippy. Now there are ways of trading that, and I do trade that. To be honest, since I've restarted my trading in January, it's not something that I do, and it's not something I do very well. There are other people that do it better than me, and I acknowledge that it's not a battle I want to be fighting. So, either I'm going to trade a proxy, which I didn't do today. I did it yesterday on the ECB. Instead of trading the bunds and the BTPs, I was trading the long end in the US. And I did quite well out of that. I think I went 0 ticks offside. Once I spotted what was going on, I could hit much bigger size in the US bond market, because I just know that there's going to be at least a reaction. There's going to be at least a small reaction in other markets that on these kind of events tend to be quite correlated. So know when these correlations are in play is a really, really big thing. So yeah, these are all the pointers I can give you for trading data. So I haven't gone into too much about how I trade this, how I prepare for the data, but on big data like this, please prepare, be ready. I did 3 days of preparation for the ECB yesterday. I'd read prior statements. I'd looked at prior journals on what happened in the ECB, and I will be debriefing the ECB in full, absolutely, because it's just so important for me to have this, ingrained in my brain. I need to remember all these things that have happened so that next time when these things happen, I'm better prepared to take action. And also to recognize when it's time for me to step away and say, right, okay, this behavior is just, it's just not for me, guys. Anyway, that's all I've got to really say. But just going back to preparing, go and have a look at my blog on how to trade the NFP. If you subscribe, I include it because it's quite important. It's included in the newsletter that you'll get on the welcome. So please check it out. Please please subscribe. It really does keep me motivated to know that people are actually watching this. I started off with 2 people watching me on YouTube and 0 Twitter followers, and it's slowly building up, and that's giving me some encouragement, and I'm hoping to grow that community a bit bigger as quickly as possible, because obviously it keeps me motivated. But the real reason I'm doing this is because, one, I've seen how trading education is conducted, and I don't agree with it. I think in order to learn, you need to understand the technical and the fundamental basics of trading, but you also need someone to show you in real time, to show you where things are going wrong, to show you where you want to be looking, to show you all these things that just by reading a blog or by watching a video, it's just not going to cut it, guys. And please don't get fooled into buying indicators. I have no indicators on my charts, okay? I have the most basic tools. Let's have a look what I've got. I've got a Renko chart. That's just a sort of, I don't even look at where these things go. What I'm looking for is the rotations. I'm trying to see how big the rotations are going one way or another. Okay, I want to see if they're big rotations upside, big rotations to the downside. Are there counter rotations? How is the auction? How healthy is the auction? I've got a footprint, which is my go-to tool for entry. This is where I get in, okay? I'm looking for a specific pattern that I recognize that is profitable for me in areas that I want to conduct business. I'm not looking to smash things unless there's some, sorry, I'm burping on YouTube. I'm so sorry. I held it in, guys. Footprint is just the go-to tool I use for order entry. I've been using this tool since 2013 when it was the footprint charts, and then I think CQG took them over. I have no idea what happened to Trevor and Footprint, but he was one of the nicest guys. He was always so helpful. I hope he's still out there doing something well, because he deserves all the success in the world for bringing us this great tool that we use on a daily basis. And Footprint just shows you the inside of a candle, and you can learn a lot from that. especially order entry. I use cumulative delta, and that shows me the aggressiveness of the opposing forces, buyers and sellers. Are they doing a good job? Are buyers getting long aggressively, or are buyers buying into a very passive seller? These are all things I can detract from footprint and delta. What other tools do I use? I like I really like candlesticks. It's just something I've just always used. I know people don't like them, but I've started to use rotational candlesticks. I've started to use rotational candlesticks. Hey, let's bring this fella in just to have a look. Look at that, guys. I mean, that's just incredible. Look at that balance, and what do you expect? You're looking for change, okay? And now this is kind of change that I like to look for, but it's just happening too quickly. If you look at my notes on trading the NFP, one thing I also do is I set stops either side of balance into a data. Now that is dangerous, but if you use OCO orders, and this is my trading style, not yours, okay? Don't do this because I'm telling you to do it. I use stop orders either side of balance to take out those lows and try, you know, if I believe strongly that there'll be stops above or below a certain level, okay? To be honest, I wasn't too sure about today. I thought we might find buyers, especially around 72. Okay, but I'm not trading what I think. I'm trading what I understand from what the auction's telling me. And at the moment, I'm seeing a very big extension. The likelihood of more stops being below us are less. Had we been in an area of balance, like if we were in this 8-day balance that we were in the last few days, that's the kind of trade that I'd like to do. If we were consolidating for a couple of, from yesterday, if we were consolidating, that's something that I would be looking to do, especially for a nice tight band. We're just seeing, competing liquidity, just holding in a certain bracketing. But I do like using candlesticks, guys. It's just visually for me, it's really important. I can go down to the reload time frames. I can use it for entries, although I use footprints now. I use rotational footprints. I find that a bit more useful because the rotations just slow things down a little bit. So when it speeds up, I've got the rotations to sort of bring me a new candle, a new bar. But when it slows down and we're not rotating and nothing's really happened, I'm not being distracted by things that are moving. And that's the problem with candlesticks, is that when your constant is time, then when things aren't going very much, things aren't really happening in that period of time that you're watching or you've chosen as a bucket, then you do get these repeated prints, and it does get tiring sometimes. So rotational candlesticks are really good. I use those. I use the obviously I'm old, and I've just learned using candlesticks, and I understand how to read candlestick patterns and pin bars and crows and soldiers and all sorts of nonsense like that. But I don't really use that stuff too much. I just use it as a visual, and plus it's on all the free stuff that I use to check markets when I'm not at my desk. I use a website called investing.com. I have no affiliation to them, so but I just find that they're offering free live charts to me, and that's great. Anyway, I don't know what you've learned from this CPI from me, if anything, right? But I want to this is what I want to stress to you guys. Trading data is an incredible skill that you cannot just, you cannot enter the arena and expect to fight against gladiators when you have not trained like a gladiator. To train like a gladiator, you need to have witnessed multiple events, multiple scenarios, just to understand what goes on. You need to understand also that location of the trade is so important. Today actually was quite good in a sense that we knew that sellers were pushing this down, and they were looking for liquidity, and a break below where they found liquidity tonight overnight could trigger some more price discovery where sellers try to find buyers. So don't start trading data. Start on the demo. Please don't just start trading data. Some data is easier to trade than others. Okay, some data it's just got a, you know, there's like a, you know, like PMIs in Europe. I mean, so often the move happens before the data even comes out. I don't know why. Maybe the Germans like to leak it. Maybe they don't. Well, I think they do. The Germans like to leak the data, I think. So the move happens well before, or happens, you know, PMIs are out, you know, into 9 o'clock. They get released in you know, separate stages. You've got the French, you've got the German, you've got the Italian, you've got the Euro ones. But the moves tends to start initiating from 7, 8 o'clock. And by the time it gets to the data, you get a flush, but then you also get like, you know, covering, opposing covering out of that. And people get caught so many times trading PMIs. Each data has its own characteristic. These CPIs, these CPI data, going back to February, they have been triggers, but we have seen whipsaw. So understanding the whipsaw, you know, sometimes you get treasuries just, you know, on NFP, it's like insane the whipsaws you get on NFPs. Although NFPs now sort of much more on the back foot. We're not really looking at it as much because we just know the market is good. We're looking at we're looking more at inflation data. We know that the Fed, that's what they're concentrating their the ammunition on. So you're not going to be able to trade these events properly if you've not seen loads of them. When I started on the floor with you know, on my discretionary trading journey, which is relatively new. I've only been doing it for a couple of years with a break in the middle. What I found, I learned from the top guys, was that how prepared they were for these events. Okay, and if you look at my NFP breakdown of how to I trade it, that will give you some clues. Then what I did is I went and spent weekends just looking back at multiple events, the same ones, CPIs. How does this react? How's it changing? How's the reaction changing? Is the change in reaction led by the status of what the Fed's looking at, or not the status, the you know, the criteria the Fed's looking at? Is it you know? So basically, I went back and I looked at the economic data, saw how it was evolving over time. I analyzed how the effect of that data, how it moves, and I did that for almost every big data figure: NFP, CPIs, ECBs, Fed meetings, and even though I never journaled discrete events as a systematic trader, I built a huge portfolio of journaling, and it helped me so much. And I learned things I didn't even know before. As you know, as a bond trader of 20 years, there's things that I spotted when I really drilled down, and I started using some interesting data as well. I started using some Python code to start analyzing what's going on, like to the most microscopic level of trading. When I say microscopic, I'm talking about milliseconds, and I'm talking about ticks here, singular ticks. And, you know, that's how. You know, that's how. But it just took me a long time to journal all of that. But it was a process, and it made me a better trader. It made me a better discretionary trader. All right, that's all I want to say on the whole subject. I think I'm waffling again. I love to talk, especially when I'm by myself. So yeah, thanks for watching, and I'm gonna take a little break. I'll do the debrief quickly, or should we just do the debrief now? Should we do the debrief? No, I'm going to set up a separate stream for the debrief, guys, just because I think if people want to reference back to it, it's easier on the channels to do that. Okay, so I'm going to cut this stream short now. I just did this as a CPI special. I just wanted to record it as well for myself, so I might as well talk over it all whilst it's happening. Yeah. Okay. Right. Stop streaming. Thanks guys for watching, and I'll catch you in a few minutes when I start my my debrief and plan for the day. To be honest, my plan is to get outside and not trade the day. I have no interest in trading this at the moment. Okay, if I was looking at taking positions, I'm again, spike rules apply. If you go into my blog, you'll find spike rules. What I do, I don't know how detailed they are, but they're a good guideline. So I'm looking at spike rules for the next for this session. We've got a huge spike. We're going to open with a huge gap. Can we close that gap? We've got 50 points to the prior close. Let's see. Anyway, I'll do it. I'll do it again in a full debrief and plan in just a few minutes. Just give me some time to gather my thoughts and have a break. Okay. Thank you guys for watching. I really, really appreciate all the support. Thank you guys. Like and subscribe. Like and subscribe.